To Facebook. From dorm room to $1 trillion. The Metaverse bet that changed everything. In February 2004, a 19-year-old Harvard sophomore named Mark Zuckerberg launched what he called the Facebook from his Kirkland House dorm room, initially restricting access to Harvard students who needed a harvard.edu email address to join. Within 24 hours, over 1,000 students had signed up, crashing the servers that Zuckerberg was running from his dorm room. By the end of the first month, half of Harvard's undergraduate population was actively using the platform, spending an average of over an hour per day scrolling through profiles, poking friends, and writing on walls. What started as a digital version of the physical Facebook directories that colleges distributed to help students connect would become the foundation of an empire that would reshape human communication, redefine privacy, influence elections, and ultimately bet its entire future on a vision of virtual reality that most of the world wasn't ready to embrace. The rapid expansion from Harvard to other Ivy League schools happened with lightning speed that even surprised Zuckerberg and his co-founders, Eduardo Saverin, Andrew McCollum, Dustin Moskovitz, and Chris Hughes. By March 2004, Facebook had expanded to Stanford, Columbia, and Yale, with students at each university clamoring for access and creating waiting lists that generated massive buzz across campuses. The exclusivity factor proved to be brilliant marketing as students at universities without Facebook access began petitioning their schools and creating fake email addresses to try to gain entry to what was becoming the most addictive digital experience of their generation. By June 2004, Facebook had reached 30,000 users across 12 universities, and Zuckerberg made the pivotal decision to drop out of Harvard and move to Palo Alto with $800 in funding from Peter Thiel, who became Facebook's first major investor after writing a check for $500,000 for a 10.4% stake in the company. The move to Silicon Valley marked the transition from college experiment to serious business venture, as Zuckerberg recruited his Harvard roommate Dustin Moskovitz to join him as the company's first chief technology officer, while Eduardo Saverin remained at Harvard to finish his studies and manage business development from the East Coast. The transformation of Facebook from a college networking site to a global platform required navigating intense competition, legal battles, and the challenge of monetizing a user base that expected free access to social networking. By September 2005, Facebook had expanded to high schools and required users to have invitations from existing members, maintaining the exclusivity that made the platform feel special and desirable, rather than open and commoditized, like competitors such as Friendster and MySpace. The decision to open Facebook to everyone over 13 years old in September 2006 marked a watershed moment that tripled the user base to 12 million within 4 months, but also marked the beginning of the platform's evolution from a tight-knit community to the sprawling digital ecosystem that would eventually encompass nearly 3 billion users worldwide. Zuckerberg's vision extended far beyond simple profile pages and friend connections. He envisioned Facebook as the underlying infrastructure for human social interaction online, which led to the launch of the Facebook platform in May 2007, allowing third-party developers to create applications that could access user data and social connections. This platform strategy generated massive engagement as users played games like Farmville, took personality quizzes, and shared everything from their favorite movies to their political opinions, creating an unprecedented data collection operation that would become the foundation of Facebook's advertising empire. The introduction of the news feed in September 2006 sparked the first major user revolt in Facebook's history, with over 700,000 users joining groups protesting the feature that automatically displayed friends' activities, relationship changes, and photo uploads in a centralized stream. Initially seen as a privacy invasion, the newsfeed became Facebook's most valuable innovation, increasing user engagement by over 300% and creating the addictive scrolling behavior that would define social media consumption for the next 2 decades. Zuckerberg's response to the backlash demonstrated the leadership philosophy that would guide Facebook through numerous controversies, acknowledge user concerns, make minimal privacy adjustments, but never reverse course on features that increase engagement and data collection. The newsfeed controversy taught Facebook that users would initially resist changes that felt invasive, but would ultimately adapt and become dependent on new features that made the platform more engaging and addictive.
This pattern would repeat with every major Facebook update, from the introduction of the like button in February 2009 to the implementation of algorithmic timeline filtering that prioritized content most likely to generate clicks, comments, and shares over chronological posting. Facebook's path to becoming a trillion-dollar company required mastering the art of digital advertising while navigating regulatory challenges, competitive threats, and internal scaling problems that threatened to collapse the platform under its own growth. The company's initial public offering on May 18, 2012, was simultaneously one of the largest tech IPOs in history and one of the most disastrous debuts, with technical glitches on the NASDAQ preventing many investors from executing trades and the stock price falling from $38 to $18 within 3 months. However, Facebook's mobile advertising revolution began in earnest in 2012, just as smartphone adoption was exploding worldwide, and users were shifting from desktop to mobile internet usage at unprecedented rates. The acquisition of Instagram for $1 billion in April 2012 initially seemed overpriced for a 13-employee company with no revenue, but proved to be one of the most prescient purchases in tech history, as Instagram's visual-focused platform captured the attention of younger users who were beginning to migrate away from Facebook's increasingly crowded and algorithm-heavy main platform. The Instagram acquisition demonstrated Zuckerberg's strategy of buying potential competitors before they could threaten Facebook's dominance, an approach that would later extend to the $22 billion purchase of WhatsApp in February 2014, giving Facebook control over global messaging and communication in emerging markets where WhatsApp served as the primary internet communication tool. The period from 2016 to 2018 marked Facebook's transformation from a beloved social networking company to one of the most controversial and scrutinized corporations in the world, as revelations about Russian election interference, the Cambridge Analytica data scandal, and the platform's role in spreading misinformation fundamentally changed public perception of social media's impact on democracy and society. The Cambridge Analytica scandal, which broke in March 2018, revealed that the personal data of 87 million Facebook users had been harvested and used for political advertising without their consent, leading to Zuckerberg's first appearance before Congress and intense regulatory scrutiny that continues to this day. Facebook's user base continued growing despite these controversies, reaching over 2.8 billion monthly active users across its family of apps by 2020, but the company faced increasing pressure from regulators, advertisers, and employees who questioned whether the platform's engagement-driven algorithms were amplifying harmful content, including hate speech, conspiracy theories, and political extremism. The 2020 presidential election and the January 6th Capitol riots intensified criticism of Facebook's content moderation policies, leading to the suspension of President Donald Trump's account and the implementation of new restrictions on political advertising and election-related content that fundamentally changed how the platform approached content governance.
Mark Zuckerberg's decision to rebrand Facebook as Meta in October 2021 and invest over $100 billion in virtual and augmented reality represented the biggest strategic gamble in the company's history, essentially betting the entire future of the social media empire on a technology that remained largely experimental and unproven at consumer scale. The metaverse vision that Zuckerberg articulated involved creating persistent virtual worlds where people would work, socialize, shop, and play using VR headsets and AR glasses, representing a fundamental shift from two-dimensional social networking to immersive three-dimensional experiences that would supposedly become the next evolution of human-computer interaction. Meta's Reality Labs division, responsible for developing VR hardware and metaverse software, lost over $13.7 billion in 2022 alone, while the company's core social media advertising business faced significant headwinds from Apple's iOS privacy changes, TikTok's competition for user attention, and a broader economic downturn that reduced digital advertising spending across all platforms. The metaverse bet required Meta to simultaneously maintain its existing social media platforms while building entirely new categories of hardware and software, including the Quest VR headsets that needed to become as mainstream and affordable as smartphones for the metaverse vision to succeed. Wall Street's reaction to Meta's metaverse strategy was initially catastrophic, with the company's stock price falling from over $300 in September 2021 to a low of $88 in November 2022, wiping out over $700 billion in market value and making Meta one of the worst-performing major tech stocks of 2022. Investors questioned whether Zuckerberg was abandoning a profitable social media business, to chase a speculative technology that might never achieve mainstream adoption, especially as competing tech giants like Apple and Google appear to be taking more measured approaches to VR and AR development. However, Meta's financial discipline in 2023, combined with the launch of new AI-powered advertising tools and the recovery of digital advertising markets, led to a remarkable stock price recovery that saw shares climb back above $400 by early 2024. The introduction of the Quest 3 headset in October 2023, priced at $500 with significantly improved mixed reality capabilities, began showing signs that VR technology was finally approaching the quality and affordability needed for broader consumer adoption beyond early tech adopters and gaming enthusiasts. The broader implications of Meta's transformation from Facebook extend far beyond a single company's strategic pivot, representing a fundamental shift in how technology companies think about platform evolution, user engagement, and the future of human digital interaction. Meta's family of apps continues to dominate global social media usage, with over 3.9 billion people using at least one Meta platform monthly as of 2024, generating over $130 billion in annual revenue, primarily from sophisticated advertising systems that can target users based on their interests, behaviors, and social connections with unprecedented precision. The company's investment in artificial intelligence has accelerated dramatically, with Meta's AI research contributing to breakthroughs in computer vision, natural language processing, and recommendation algorithms that power not only its own platforms, but influence the entire tech industry's approach to machine learning and user personalization. Zuckerberg's vision of the metaverse remains largely unrealized in terms of mainstream adoption, but Meta's continued investment in VR and AR technology has pushed the entire industry forward, inspiring competitors and establishing Meta as the clear leader in consumer virtual reality hardware and software development. The story of Facebook's evolution to Meta represents one of the most dramatic corporate transformations in modern business history, demonstrating both the incredible wealth-generating potential of digital platforms and the existential risks that come with betting everything on unproven technologies and changing user behaviors. From a Harvard dorm room experiment to a trillion-dollar metaverse bet, Mark Zuckerberg has consistently shown willingness to make bold strategic decisions that prioritize long-term vision over short-term profits, even when those decisions face intense criticism from investors, regulators, and users. Whether Meta's metaverse gamble will ultimately prove as transformative as the original Facebook platform remains to be seen, but the company's ability to generate massive cash flows from its existing social media properties provides the financial runway needed to pursue ambitious long-term bets that could define the next generation of human-computer interaction. The empire that began with college students poking each other and writing on digital walls has evolved into a complex ecosystem of social platforms, advertising technologies, virtual reality experiences, and artificial intelligence systems that collectively influence how billions of people communicate, consume information, and understand the world around them, making Meta's continued evolution one of the most consequential business stories of our time.